Brooke, what was your takeaway?
You know, it's not great. I think what is the key point here is that they continue to see global uncertainty. They continue to see slow growth. And they're not necessarily seeing that turnaround that a lot of people were expecting from that U.S.-China trade deal. I think a lot of expectations were for this really quick rebound in demand, and it just doesn't work like that. You have a number of limiting factors where there are still tariffs in place on $360 billion of goods coming from China. There's a cap on profit growth. You're just not really seeing the demand for spending yet, and it'll take some time.
But what you saw in these numbers today, is this pretty much Caterpillar specific, or is there a broader industry issue here that we should be concerned about?
I think Caterpillar is still a bellwether. You know, there's been a number of companies that we traditionally think of as bellwethers that no longer fall into that category. FedEx, of course, being one of them. But Caterpillar still tends to have its tentacles into a lot of markets. And what stood out to me is they're calling for a decline in residential and non-residential construction in North America. That affects a wide swath of the industrial sector. You are still seeing demand from institutions, but not great. They're seeing flat to down 5% in China. That's before really factoring in any kind of impact from the coronavirus. And so I think that is certainly a watch item. And it is very competitive in China for Caterpillar, which of course raises questions about pricing and their margins down the road.
Also, isn't China trying to cannibalize some of the Caterpillar's lower-end products, as in they're trying to make it themselves so they don't have to pay Caterpillar for it?
That is a big trend. So China's doing that with a lot of different industrial products. We've seen them do that with trains. They're trying to get into gas turbines. And so there is a very legitimate question about whether they start undercutting American manufacturers. Of course, that's supposed to be part of the trade deal, that they have all these big purchasing equipment to buy American products. But we still don't have much detail on what exactly that entails.
Deal? So it wasn't just all soybeans?
No, allegedly, it was almost $80 billion of manufacturing products. But again, we don't really know. And so much is not known that Boeing is, in fact, cutting its 787 production rate because of orders not materializing from China. But to your point, I think we're going to continue to see this trend where China is trying to be a player in manufacturing, and that does raise concerns about market share and margins down the road.
I also wonder where Caterpillar is kind of in the demand chain, because I spoke to the CEO of International Paper yesterday, and he said the second the trade deal was signed, he saw an increase in orders, but he sits like right at the beginning end of demand, at the beginning of demand, I should say. So he sees it right away. Where's Caterpillar on that?
So they're a little bit longer cycle, but even in shorter cycle industrial companies, you're not necessarily seeing that pickup. I think of names like 3M and Rockwell Automation. They're calling for sort of a downbeat first half and maybe a recovery in the second half. The problem is we've seen this movie before with first half being slow and then second half picking back up, and it does not tend to always work out that way.
One of the things I found fascinating in this report is just kind of the disconnect that we've been seeing with regards to business sentiment and consumer sentiment. I mean, all the major consumer sentiment gauges are either at or near record highs, and yet we're getting these types of reports out of the companies, and they continue to say, it's not just the reports. I mean, the CEO's comments were pretty dour.
They are.
And I don't understand the disconnect.
I think one reason why that disconnect persists is that you have not really seen significant restructuring from the industrial companies, because there was an expectation even among the CEOs that this trade deal might resolve things, that might drive a pickup in growth. Now you are starting to see some incremental cost cutting coming out of the industrial companies. So does that ultimately filter down into the job market? Does that ultimately sour consumer sentiment? I think that depends on whether or not that second half turnaround does in fact materialize.